Good morning, traders. Welcome to this euro-dollar and pound-dollar video. My name is Chris Forsick from Elite Currency. And as usual, we're going to start with the euro-dollar, taking a look at what happened last week. We saw that... Good morning, traders. Welcome to this video on the euro-dollar and pound-dollar. My name is Chris Forsick from Elite Currency. And before we take a look at the euro-dollar, wanted to let you know that our ECS portfolio managed account is live. It started right now, so in October. We've been trading it for 2 years, and so it's been tested and results are good. But now it's also available on Elite Currency, and you can of course join if you want at no upfront fees or costs, but with a profit share model. So there's only you pay the profit when there is a profit, a share of the profit, I should say. Here you can see more information, of course, about all the stats and such, and what is it about. Very excited about ECS portfolio. All right, euro dollar, basically last week we were saying that a retracement within the downtrend is expected and that a bearish bounce in this resistance zone is likely right here. And that's what it did. It bounced at the bottom of that resistance zone and broke below the bear flag channel that we had, the blue lines right here, and the 21 EMA, and made a dash down to the 50 fib and close to the 115 round level, round psychological level, of course, as well. So that's what happened basically: retracement, bounce, re-break below, and continuation lower. Now we had another bear flag, in fact, respecting the downtrend channel, the top of that channel, and price is neatly going lower. And I think that this bear flag is about to break. You can see the price is pushing below the 20 MA. If we get a close below the 20 MA, or if we get a close below this trend line, or if we get a red, we already have a red candle. So yeah, that looks good for continuation lower and a push down to perhaps the WIS8 level at 114.30, 61.8 at 113.50. But before we think about those targets, though, just be aware that 115 round level is still active and can still be support. So it could just be a small push down to that target, and then there could be a bounce. If price does break above the channel, there could be, of course, a bigger retracement possible, and there could be a bigger pullback. Let's take a look at the daily for that. For the moment, you can see that we were looking at either an ABC or a 1, 2, 3. Well, if it breaks below the 50 fib, then, and below 115, I would say, then it's probably not an ABC but a 1, 2, 3 pattern. So it's still it's a bit of interesting, important zone. So that changes perspectives a little bit as well, in the sense that a bearish break might be a little bit more dangerous because of the small target and the bigger 50 fib. And maybe a slight divergence as well here apparent. So I would definitely say that 115 is a level to be careful of, and a bounce there could still be part of an ABC pattern. But if it breaks below that, then of course we're solidly in a downtrend still, and with plenty of space below 115, more downside is expected. So 115 pretty important, I think. 114.75 to 115. Below that, it should be a downtrend continuation. But so far, this is looking quite bearish, and I would say bearish break more and more likely at this moment, that there will be a continuation below that 115. But yeah, well, let's see if it happens. Daily candle, of course, would help if there's a daily candle close below 115.38. 115, what is this low? 115.30. And for the bulls, well, really I don't see any interesting upside unless there's a clear break, pullback, and bounce. Or even more interesting, really above 117 is the zone here to think about before we get into some bullish territory, and above the resistance at the 21 EMA zone. Otherwise, this is bearishly aligned, so really only here it starts to become a little bit more bullish. Otherwise, pretty bearish and pretty bearish territory, but strong support zone needs to be broken before more space is visible. With the pound USD, we had a bounce at the 272 target. We had a double top at the 272 target. We got the bounce as expected, but it was a minor bounce, and we still tagged the minus 61.8 target. But the move up was quite slow and choppy, and it's looking more like a rising wedge at this moment. So the minus 61.8 target seems like an ABC pattern might have completed there, or a 5-wave pattern as well. It's also possible. But in any case, the bearish alignment of the moving averages, the rising wedge, the minus 61.8 target, the reaction at the minus 61.8 target seems like there's a bearish response to that. There's also a lot of resistance here from previous bottoms, plus the 21 EMA. So it seems like a spot of confluence where a bounce could take place, and there could be a reaction and a retest of the previous lows. It's very much stuck between the moving averages on many time frames, so that could be tricky. You can see on almost all time frames it's stuck between long-term and short-term moving averages, which means it's being squeezed, and that's not so pleasant. But I think a break below 20 EMA should see this fall lower to test the bottom. But because of the squeeze, as mentioned, and the pretty significant move up, I'm not sure if it will break that bottom. I don't think it will. I think it just will test the bottom and bounce it back up again. It might start to make some kind of first attempt of a triangle pattern, for instance. And it might be a spot where it makes higher lows and lower highs at this moment. That's what I expect at this moment, a range territory. So for me, a bounce, and then a bounce, and then a bounce probably makes the most sense. That's my 2 cents. If there is a break, of course, that changes perspectives. If it breaks below this bottom, if it breaks above this this 137.50 level, then of course it could be in a bigger upside. But for the moment, even if it moves up, there's still plenty of resistance. So we really have to break above 137.50 or break below this bottom for me to change that kind of triangle consolidation pattern outlook. All right, that's my weekly update. We'll be back next week, 18th of October. Join us on our Elite Currency YouTube channel, of course, to find out more about the euro dollar, pound dollar, and of course check out our ECS website, ECS portfolio on the website for more information about that. And hope to see you as a investor. Of course, only with the risk capital that you can afford to lose. Wish everyone great trading. Cheers. Bye bye.